Google is one of the most undervalued tech names in the entire stock market, and I'm going to show you guys 5 reasons why I continue to acquire stock in this company and why I actually believe that AI is going to enhance their business rather than subtract from it. Starting with number 1, Google Gemini. Now, historically, Google has held up a very large market share in search. There's not even a second place whenever it comes to search volumes. And so there is a real case to say that AI could be an existential threat if it's 10x or even 100x better product than what just going to google.com is. However, this is where Google does not want to give up. Google Gemini is trying to bring new features and expand their TAM overall. Starting with the frontier models that Google has been able to deploy, Gemini is up there with the absolute best and potentially even a better model than what you can even get at ChatGPT, even though they've had first movers advantage and a larger user share so far. And it's not just about having as many users as you possibly can. You also need the cost to serve those users to be lowered dramatically. And Google is by far at the frontier of lowering the actual cost per query whenever it comes to these new AI breakthroughs. Plus, let's talk about those TAM expansion type products.
This means the model can converse in more expressive ways. It can capture the really subtle nuances of how we speak. It can even seamlessly switch to a whisper like this.
They did this with different speech styles and also in multiple different languages. Now, whenever this comes to different total addressable markets, you have to think about where we could potentially bring search or other information tools that we couldn't before, like in potentially with cars, right? Hands-free driving is obviously something that we still need today. Potentially that gets to fully unsupervised driving, but as it currently stands, there could be a potential where Google starts putting search in information products where we just didn't have before, and that could also lead to more advertising revenue or subscription revenue. But think about the creative tools that we also have here, right? With things like Imagine 4, where you could offer such higher subscription models for creators and different businesses that potentially would want to create things like video from VO3. Now, by far the largest opportunity that Google has right now is not just in generative AI, but agentic AI, the next phase of artificial intelligence, where you can tell these bots to say, hey, I actually need help finding apartments and I don't just want listings. Go ahead and actually, set this up, find where they are, send them emails of my actual, wants for these apartments. See if you can put in a bid, all of these things. And this is just by far the first layer of what you'll be able to do with agentic AI. And their monthly tokens processed is up 50x year over year, by far the largest step change than any of the other AI companies, aside from ChatGPT. And the reason why I think that Google is going to win in this area is because they have IP that other companies could not compete with. Imagine better personal context because they understand who you are. They understand where you are or your preferences in YouTube or photos or what you like to do on search or Gmail or any of the other tools that they've already have that are on the internet where they understand you as a user, but they also have the distribution as well. We talk about agentic AI and using these tools, but the tools actually have to be where you are. So it helps that most people are on Android. It helps that, Google Workspace is used by billions of users, or Google Cloud has over 1 million organizations. These types of places are the best ways to actually distribute the Gemini product and also learn more about its users and also potentially even learning on all the information that you're learning from, which sort of gives them a gap from their competitors because they might be the fastest to market. Although ChatGPT has a lead right now, that might not always be the case. So if you put these two things together, what you have is personal context and distribution, okay? What you can see here is that this user is writing back an email, which it understands your writing style because it understands your context. It knows your past emails, and it's taking things from other parts like Google Drive to make the best email possible, and it's all within your own Gmail, which is the distribution here. So this is a perfect example of how great agentic AI can be and how smart these different models can get just based on the information that Google can bring in that just simply cannot be competed with. Now, none of this is 100% guaranteed, and ChatGPT has a lot of great AI talent that could find ways to solve those problems and take away from Google's potential markets, right? But this is where number 2 comes in, valuation. What is the margin of safety of taking a bet on Google that they will succeed versus other companies that might be, getting markets a little bit overhyped on the potential that those companies actually have? Google although still growing, although people think that they're somehow dying, is still a growing business. Revenue continues to climb, some faster in other areas, right? Google search, for example, only growing at around 10% year over year, but a lot of people are pricing it as if they're dying, as if all of the users have stopped using Google search and now they're on ChatGPT or, other models instead and not using search. According to the revenue, they are still going on Google search and potentially will look forward to things like AI overviews and AI mode more than potentially going off platform and trying to be won over by other companies. Now, currently, their price to sales ratio is about 5.7 times, but their forward price to sales ratio, which means their next 12 months, not factoring in the past 12 months, but the next 12 is also looking at about 5.18 times, meaning that they still are expecting further growth in revenue, let alone margin. Now, whenever we're talking about that margin, what we can see is a price to earnings ratio. How much net income are they actually making on the revenue that they are actually bringing in? And Google right now is sitting at the cheapest levels in all of the Mag 7, sitting at the very lowest at 18.9 times. Whenever we take into account what Wall Street is expecting for future growth, not what they are actually going to do, but what Wall Street is expecting, which in my opinion is very bearish, and they're actually beating estimates almost every quarter, is that you get a PEG ratio of 1.23 times, which for the Mag 7 names is actually really cheap and actually puts them second place only to NVIDIA, another very favorite company of mine. And while Google enters new markets, defends their moat, continues to grow in earnings, they're actually giving back a lot of those earnings back to their investors, with 3% going into share buybacks, which increases the earnings per share artificially, and then an additional 0.5% in dividends. So about 3.5% shareholder yield, which goes right back into our pockets, either through a direct payment or an adjusted actual increase in the total ownership of these companies. And this has been happening for a long time. Google has been continuously lowering their total share count. So if the stock does stay low, they're going to be able to boost their earnings per share by continuing to purchase more of their shares back from open markets. And Google is still very focused on the future. It's not just buybacks and dividends here. If we take a look at their capital expenditures, which is their purchase of property and equipment, in their case, mainly data centers with very powerful NVIDIA GPUs, they're spending about $17 billion last quarter, or about a 43% increase year over year, solely based on trying to allow people to make more tokens so then we can give more access to people for Google Gemini. This can greatly affect their cash from operations, which flows down into free cash flow. See, if we actually take a look at the Mag 7's price to free cash flow rankings, Google still places at the lowest across any of the other Mag 7s, while still pouring a ton back into capital expenditures and focused on future growth. Now, going forward, we're not going to talk about Google search again. I didn't even bring up the fact that, artificial intelligence is going to actually help with the advertising platforms and actually make higher conversion rates, which means that they could potentially even charge more for all the advertising business that they are working on. But let's go on to future projects, okay? Things like Google Cloud, for example, which I think will be absolutely massive for Google going forward. Not like it already isn't. I mean, they're growing at 28% year over year, at some points just recently in 35% areas, with massive growth expected coming forward. Currently, they place around third place amongst all of the large hyperscalers and being one of the fastest growers amongst them. In just a very short period of time, Google has went from negatively contributing to Google's bottom line to overall contributing an operating margin of 13.8%, with based on their competitors likely seeing that continuing to grow all the way to 30+%. And with research reports showing that cloud revenue is going to potentially reach a $2 trillion industry by 2030, likely due to AI rollouts, speeding up their pace of growth, we're actually potentially seeing a 22% compounded annual growth rate from the end of 2024 all the way through 2030. The current cloud market is also growing around 22% right now, which actually shows that Google is actually taking market share, considering a lot of their competitors are actually growing slower than that. And they want to show the market that they can grow even faster than that, acquiring Wiz, which was a $32 billion brand new cloud security company that works across all of the hyperscalers, Google Cloud, Microsoft Azure, and AWS, to prove a differentiation amongst those clouds by offering native security that is top of the line across any of their competitors. And these mix of advantages that Google has, like better security and artificial intelligence on their cloud, is allowing them to sign huge deals like this $2.5 billion deal with Salesforce. Now, for number 4, we have one of the strongest IPs in the entire internet, YouTube. Now, as you guys can see, YouTube is being viewed on the TV. There's nothing else that's being watched on the TV more than YouTube these days, which obviously is very healthy for their business as they can continue to make more and more advertising revenue. But they're also bringing on users for podcasts, for people who are going to the gym, and all of these things that are actually more screen off activities, which is what YouTube has not historically been known for. Either way, it's going towards the same goal. We're having a business that is now over 2.5 billion monthly active users and continues to grow each and every year. Revenue from YouTube is hard to calculate as they only separate it from YouTube ad revenue, but we know that that's not their only source of revenue here. And YouTube now has 125 million premium subscribers, which does actually allow, just for $14 a month, to get access to all their music libraries, to skip advertisements and all of these things. So although YouTube's ad revenue can continue to grow over time, I am not contributing as a user to this ad revenue at all because I'm actually charging, YouTube via subscription. So that would go under their subscriptions revenue, which is really hard to break out because they do it under multiple different sources, like Google One, for example, or Google Drive as well. And there's a massive connection here between Gemini and YouTube. This massive area to allow to go in to train the models with all the informational videos and everything like this. So it's such an advantage for Gemini to also be under the same parent company as what YouTube is under for Alphabet and Google. Now, before we get into the last one, I want to show you guys the future prospects, which is a bonus point for me, which is just essentially their hardware moat, okay? We have all the smart home products that they all end up having, which also sell and are doing great. I'm essentially a product owner of every single one of these. And Google Home is now integrating deeper with Gemini to allow things for better tracking for their cameras to identify people better, or on the phone is one of the greatest distributions of the Gemini products. So that's also an amazing advantage as well. They also have amazing moonshot projects like quantum. If potentially quantum is one of the next layers of computing, well, Google wants to be a part of that as well. And they've put in a ton of investment and actually have seen quite the breakthroughs with their Willow chip to potentially advance quantum computing as well. You're also seeing them work closer with a company called Apptronik for humanoid robotics advancements. The AI-powered part of these humanoids will be Google Gemini. So it's very interesting knowing that they have all of these different, not only venture arms, because they've taken an investment in Apptronik, but also the fact that they are going to be part of these next waves of AI as well, which we consider physical AI. They're also potentially looking at helping this with an acquisition like Wing. As drones are getting better and better, we're seeing more and more companies start to use these drone delivery services because they're much cheaper for the smaller items to get delivered much faster as well. And probably the largest and most serious future moonshot is the Android XR platform, which is essentially VR and AR, or virtual reality and augmented reality. I'm a native glasses wearer. If there's a potential where I could potentially add speakers here or potentially see directions through my lens, which you can actually see here, you're getting text messages directly onto your glasses. They're inviting you places. You can look down and check the directions. These sort of, use cases are absolutely brilliant. If I could put these on the glasses with the prescription that I already have, this is absolutely brilliant. It's not like they're the only player in this space, but it's good to be a part of that overall market share as well, and knowing that they are making great advancements here. And lastly, which is not as far of a moonshot as we actually think, is Waymo. Waymo is showing that this is not a speculative business anymore. This is 100% going on the roads today, and I've actually been a purchasing user of a Waymo ride. They're showing better safety than humans. They're expanding into areas like Miami, Washington, D.C., and Tokyo, and actually just more recently, Orlando, San Antonio, and Houston, all expected to be on the roads by 2025. We're seeing a massive step up in the overall rides that we saw in March due to pricing changes, because obviously there's no rider in the car, there's no one to tip. So the overall total cost of ride is actually much lower, could be much lower than what a potential drivered vehicle. Plus, the overall safety, comfort, privacy, just much, much higher in a fully autonomous vehicle as well. This has allowed Google to double their investment. They're going to go from 1,500 roads across the cities that they're in to now over 3,500 just with the Jaguar I-Paces. This is not even including their investment in their Gen 5 vehicles, which is going to be more of the Zeekr, much cheaper models that we end up seeing that are coming from China. And the new capabilities of these vehicles means that the, hardware is slapped onto the car and they're sort of slapped on the button, sent right to work. And in 30 minutes of being off the lot, they can immediately pick up their first user. This is unbelievable. And they're already exploring different opportunities with companies like Toyota to potentially either slap their hardware onto Toyota's vehicles for an autonomous fleet, or to help them fully self-drive their current, owned vehicles by other users. So essentially making an autonomous vehicle out of your own Toyota. This won't be something that you could probably put on after purchase, but potentially they could be selling it with Waymo technology into the future. Overall, Alphabet as a company is not just Google.com. There's so much more to search, and yet there's so much more to actually learn from information services as well. That market in general is probably going to see multiples more total usage as people find easier use cases with things like artificial intelligence. So, with all the added benefits of quantum and full self-driving and glasses that we could potentially be using, this just goes to expand the total market that Google has, along with things like YouTube and Google Cloud. I mean, the options are just so endless for Google. To be trading at one of the cheapest prices across the Mag 7 just seems ridiculous to me. And this is why I continue to buy more shares today. But ladies and gentlemen, that's all. The only thing I ask is if you enjoy this content, hit the subscribe button. Bye for now.